Good morning, everyone, and welcome to the public talks on financial sector and the new regional paradigm. I am hearing the translation. Can I not hear the translation? Thank you. Yes, and we are sitting in Ncfms premises today, on this lovely morning, a sunny day in Chisinau, and we are trying to build up a bridge with what we have discussed last year during the Digital Transformation and Financial Inclusion Conference organized by Ncfms, in which we have learned about how the digital trends are impacting the financial sector and how the benefits of this digitalization can be brought to as much as possible largest number of population via the financial inclusion. This year we have an even more challenging task. We have a situation which is another crisis and a local tension which grew into a war, and basically a local war but with global effects. Obviously, we are very much concerned and interested to learn how this situation will affect all of our lives, and specifically today we want to deep dive into the financial sector impact, and also to look at the effects which will spill over the businesses and the citizens as a result of this impact on the financial sector. So we are planning to address a few questions today, basically. What's the impact on the financial sector? What are the opportunities, if any, which could be explored out of this situation? And in order to address those questions, we have assembled a team of connoisseurs of the Moldovan financial sector. I almost said Avengers. I will start with George Shahidze, the CEO of the largest bank in Moldova, Marina Solovyova, Programs Director at Expert Group, Adrian Gheorghiță, Deputy President at the National Commission for Financial Markets, and we have online a colleague and a friend of ours who unfortunately couldn't join us live here, but we still envy him because his environment right now is much sunnier than ours. Dumitru Vicol, I hope you hear and see us, and we see you as well. Fantastic. Okay, so this being said, and I would have the honor to observe this discussion and maybe to help everyone here to stick to the timeline we've proposed to ourselves. Okay, without further ado, let's jump into the subject of our discussion today, and I would like to set up the scene by looking at the macroeconomic context, and hence the first question, which is going to you, Marina. Before the war, and even I'd say at the beginning of the year, we had a consensual feeling that the monetary policies should be tightened in order to fight with the inflationary processes, right? And it seems that right now this pressure is increasing, and we would need to understand how the monetary policies could respond to that. So what would you see, what would be your view as a macroeconomic outlook at the global level of the situation we are facing today? And how would you describe, with a few indicators, what's expecting us from the macroeconomic standpoint?
Well, before the war, central banks around the world were mostly concerned about inflation because it was already high and growing. What changed after the war is that we are now facing stagflation rather than just inflation. That is large inflation rates combined with no economic growth. The war had an immediate effect. That was the hike in prices, especially for commodities in which Ukraine and Russia are the largest exporters, such as wheat, metals, oil, fertilizers. But there are also non-immediate effect on global growth because the war and the sanctions disrupted the traditional trade itineraries and increased transaction costs. And also consumer and investor confidence is lower than before. And all of this, together with tighter global financing conditions, mean that the global growth will slow down. For instance, according to a recent forecast made by the OECD, the global growth is expected to be at the level of 3%, which is 1 percentage point below the initial projection. And an estimate made by Fitch is also close to this forecast. In terms of regional impact, this Sunday the IMF has published economic update on Europe and Central Asia. And it says that the region's GDP this year will shrink by 4%.
Regions, you mean?
Europe and Central Asia.
Okay.
But the initial projection was a growth of 3%. Mm-hmm. That's because Ukrainian economy is expected to shrink by 45% and Russia's by 11%. If we exclude Russia and Ukraine, then the region's growth will be around 2%, which is again 1 percentage point below the initial projection. And I think that's an even optimistic forecast because it doesn't take into account the fact that right now the European Union is considering stopping all imports of gas and oil from Russia. And should that happen, then Europe's GDP will be lower by 1 more percentage point. As for Moldova, the economic damage to Moldova will be larger because of its strong trade and migration ties with Russia and Ukraine. For instance, the Minister of Economy expects no economic growth this year, and the World Bank expects a slight decline of 0.4%. And again, I think these estimates are optimistic because they're based on the assumption that there will be some sort of resolution of the war in the coming months, but we don't know that for sure. And in case if the war will not end anytime soon, we might have a recession of about 3% this year. And in terms of inflation, the World Bank forecasts an inflation of 18% in Moldova this year, which I think is unlikely because right yesterday, the National Bureau of Statistics published an update on inflation, and it says that in March, consumer prices already increased by 22% year on year. And the National Bank hasn't yet published any updates on its inflation projections. An update is expected in May, but in its pre-war projection, it already forecasted that the inflation will reach 20%. So right now, we should be expecting something more than that. Okay. Some even argue that the inflation might reach 50%. So, well, I hope that's an overestimation. Mm-hmm. That might be true about the price of utilities because now they are already 30% more expensive than last year. So that could be, but not for the overall inflation, probably.
So it would be rather the imported part of it, right, which would generate
imported,
this.
Yes, considering the prices of gas.
Yes, it's generated. Okay, but sticking a bit more to the global level, Dumitru, could you please elaborate on how do you feel about the market's reaction? Marina has mentioned the commodities, and also, of course, the financial market is also of great importance to us here. What's your view from outside right now on how the markets have reacted to the situation so far?
Look, thank you for the question. So I would say at the beginning, the whole general financial market kind of took the risk quite, quite slightly, because we have already gone through this, so we already knew from Crimea that this might not have a big impact on the global market. So the initial reaction, I would say, was, something very anemic. I would say something that, well, this is something temporary, so we shouldn't take that much into account. And
So it seems that we lost Dumitru for a few moments, but actually I was then maybe, Marina, you could develop a bit more on the market side and going.
I'm sorry. Yeah, it's my issue. Sorry about that. So what I was trying to say that, look, until the European Union and the US froze the Central Bank of Russia FX reserve, until then, everyone was very, very, relatively positive that nothing was going to happen, nothing going to change the world inflation or the world growth. When the West has frozen the FX reserve of the Central Bank of Russia, then everything changed. That was a huge risk. That was, everyone kind of underestimated what can the West can do to Russia. And just to make sure that, Russia.
Okay. Until Dumitru will be with us again, I'd propose to. Okay, it seems to. Maybe we can go a bit into sanctions subject and look a bit from, while for the Russian market, the impact of sanctions is pretty much clear, although the situation is still developing and we might see some greater impacts than those which already are forecastable. Let's see. How do you feel about the impact of sanctions on a more global scale? From your standpoint, you are having not only the Moldovan banking sector experience, but broader regional, I'd say. So how do you feel about the overall impact of sanctions on the financial sectors across the region, at least, if not global?
Yes, of course. Good morning, everyone, and thanks for inviting. Maybe a few points, and these are important. The first is that we don't know, and it is progressing, and clearly we don't know if there will be something more, and maybe most likely it will be more. We are all observing the sixth package of Europe, which is being discussed at the European Union. So we may see something more, but for the ones that we have today, we know that we cannot bank with the largest and most famous Russian banks, and we know that basically many Russian customers cannot do the international transactions. And we do have the non-sanctioned bank in Russia with whom we are working specifically for the customers who are not obviously sanctions, and we don't see risks, but that will decrease the transactions with Russia. So the other thing, though, which we need to consider is that Moldova, if we take the trade balance and export-import, Moldova was dependent only about 10-15% with the markets of Russia and Ukraine. Now this is big enough number, but we should not overestimate its effect. So the largest trading partner is in any ways Europe, and this diversification will help during this period.
Thank you, Georgi. But you've mentioned that as a solution for now, you are using the relationship with large international banks, which are not under sanctions but present in Russia. Although those banks are also considering a potential exit, so there is a potential lack of solution in this case. So maybe the sustainability of this solution is not necessarily a fact right now. And on the other hand, there are alternative systems which are right now built. The Russian system, which is existing already in place, the Chinese system. And do you feel that the current situation could lead to a market fragmentation in this respect? Do you think that there might be some global earthquakes in this sense that would lead to usage of all the solutions done SWIFT at one point? Do you see that into a longer term perspective, or is it's less likely?
No, if the bank is sanctioned, then using alternative system will not help. You can use alternative system only in case the bank is not sanctioned, or use it during the period until the sanctions become effective. But when the bank is sanctioned, then it is sanctioned. Obviously, SWIFT is another obstacle for those banks. But we don't forecast, or I don't forecast that the systems will be changed.
Noted. Now, it's also a tough time for the regulators. And if we speak about sanctions for the regulators, irrespective if the country has imposed sanctions or has adhered to sanctions, the regulators need to take care that the market they are having the oversight on are respecting the sanctions regime, and there are no deviations from that. My question to you, Adrian, would be: how resilient are the regulators to the shocks of the war? Let's put it this way.
Indeed, first of all, thank you for inviting me to these discussions. I mean, each regulator has its own policy and approach. In this case, Ncfm is responsible for 3 financial sectors. So we talk about the insurance sector, we talk about capital markets, and we talk about non-bank financial sector. So for each of these sectors, the regulator may adjust its policies and approach, but provided the general objective of the institution to ensure overall stability of these markets. But still, I mean, it's quite interesting time. Both regulators and the market players should be agile, so to surf in these new circumstances. But from the perspective of an authority, it's important to ensure stability. And although, I mean, provided that these sectors are quite small in the Moldovan economy, and they are not so much regionalized as some other sectors of the Moldovan economy, at this very moment, the impact is quite small. What we do, we communicate with the market players to see how we can mitigate some risks that may arise either from the crisis generated from the war, or through the prism of sanctions that is imposed on different players from Russian Federation. And as I said, the capital market is small. We have almost no impact, and we don't foresee in short term any impact on the capital market. The same is with the non-bank credit sector. Up till now, we don't see any outflow of capital from this market. That is good. The financing of the market is continuing. The situation is more complex when we talk about the insurance sector, because we talk not only about UBOs, right, but we also talk about the situation generated by the migrants that came on the Moldovan territory with the cars. Some of them are not insured, and they produce some accidents, and these accidents should be somehow regulated. That's why generally the authority encourages everybody to buy an MTPL insurance policy. But nevertheless, there is the National Bureau of Car Insurers that may cover some of the expenses related to these accidents. And another, I would say, bigger risk is when we talk about the reinsurance. A lot of local insurance companies reinsure in the Russian, on the Russian market. Around 62% of the reinsurance portfolio stays in within Russian insurance companies. So in this perspective, we communicate with the local players to see how these risks can be mitigated, and we developed a sort of a small questionnaire to see if those reinsurance still can conduct international financial transactions, so they can still respect their obligations from the reinsurance contracts. But still, we see a trend that local companies are looking to reinsure their portfolio on the Western markets.
Okay, thank you. Now, staying in the regulators field a bit more, looking at the drop in the national bank's reserves in the past month, which is mostly due to the interventions on the domestic foreign exchange market. But how would you see the evolution from this standpoint, Marina, in the future months? You've said that the situation is still unfolding, and it might be less probable to guess exactly what will happen. But still, what would be your forecast on the further evolution? And maybe if you can look into the reasons of that, explaining them a bit more, that would be also helpful, I guess.
Well, indeed, the official reserve assets have decreased quite a lot from their peak in October. Last October, they were at $4 billion, and right now they are around 3.4 billion. This happened for two reasons. First of all, there was a sharp increase in the gas prices. So the National Bank had to make a big intervention in November to cover the importers' need for foreign exchange. And then second, in February, when the invasion started, people rushed to the banks to buy foreign exchange, trying to save their savings this way. So again, the National Bank had to make an intervention to avoid a large fluctuation of the exchange rate. But we shouldn't be worried about that, because this just means that the National Bank is just doing its job. That's why we have reserves in the first place, to use them in times of crisis. And the National Bank was successful in preventing the crisis, because the panic ended in about 2 weeks and everything returned to normal. And actually, in the last week of March, the National Bank started buying currency in the market rather than selling it. And even now, the reserves are adequate by all standards. They are sufficient to cover approximately 5 months of projected imports of goods and services, and they also cover 125% of short-term external debt. And even if they diminish again by 600 million, they still will be adequate. But they will not diminish, because there is the reserves in Moldova have a clear seasonal pattern. This means that from January to March, reserves usually decrease all the time, because in winter we spend a lot on energy imports for heating, and at the same time the season for agriculture export ends. So it's natural that from January to March reserves usually decrease. But then in April the situation starts to improve, because it's Easter and migrants send more money home, and then in May and in June agricultural exports grow again. So there are foreign exchange inflows to reserves, and they continue growing till the end of the year. Of course, this year we will have a harder time exporting to Russia, Belarus and Ukraine. As Georgi already said, the share of these countries in our exports are around 15%. But this means we still have the exports to the European Union. And also the exports of IT services are growing. In terms of remittances, from Russia are going to decrease, of course, but their share is around 11% of total remittances. And we expect that the decrease in these remittances will be partly compensated by the growth in remittances from other countries, because remittances have a counter-cyclical behavior. That means when they grow during hard times. So the overall impact on remittances will be not big we expect that the reserves will remain at the same level as last year. And we also have an agreement with the IMF to increase the amount of support under the current program, and it will arrive soon. So there will be some inflows in the reserves from those.
It's good you mentioned the IMF support, and we also right now are hearing a lot of news about EU support, which has been discussed, potential EU support. Do you see any influence from the EU support in that respect, or is it not yet sufficient information to make a conclusion about that?
Well, the European Union has recently agreed to offer us support in the form of loans and grants to Moldova in the amount of approximately 700 million euro. And of course, that will have a positive impact on reserves. We don't know yet how this support will be distributed. Part of it will go to direct budget support, and part will be earmarked for specific projects, such as handling migration, refugees, or maybe for some infrastructure projects. But either way, any grant or any foreign loan received by the government first goes to reserves, and then the National Bank exchanges them for domestic currency and gives to the Ministry of Finance. So this will help increase the reserves, will provide some inflow. Okay. Some are concerned about the possible outflows of foreign exchange.
That was my next question.
Well, looking at the historical behavior of capital flows during past crises, such as, for example, 2014, when we had a bank crisis, and there was also this first episode of tensions between Ukraine and Russia, we see that a large capital outflow is unlikely, because we don't even have large amounts of highly mobile foreign capital. The stock of foreign direct investment in Moldova is about $5 billion. But once the direct investment is here, investors are not keen on removing their investment during crisis. So they are usually stable. And external loans, both private and public, they are almost completely long-term. So the repayments on them are based on the schedule rather than on some external events. What can be withdrawn easily is foreigners' deposits with Moldovan banks, but their total stock isn't large now. It's about $140 million. And also the stock of foreigners' portfolio investment in Moldova is about $25 million, not much. But what we should be worried about is the possible stop of new investment to Moldova, because we have already had this in 2015, when the total inflows of foreign capital halved. And that caused 25% depreciation of Moldovan leu and had a negative impact on growth of about 5 percentage points. And this might happen again. Some argue that foreign investment might actually increase because some foreign-owned companies in Russia and Ukraine will relocate here, but well, I'm not so sure about that.
Okay. We can debate about this, I think, with Dumitru, if he's with us. Yeah, I think as an emerging market strategist, you could expand this point, this last point Marina raised, as a fear, but potentially as opportunity. So, what do you think about this?
On financial market, so what I was saying before, like everyone was thinking that inflation transitory, including myself, but what has happened with Russia is actually the shock will be mostly permanent. So all the commodity prices going up, and Russia and Ukraine, they're very important for some specific metals or like agricultural products that no one can replace. So we're moving into more like a stagflationary, probably a recession in a few years' time. That would be like regarding your financial markets question. On FX reserve, I wouldn't be so optimistic as Marina. The reason is because all those remittances coming from Russia, they are now almost halved. I mean, kind of the purchasing power of all our Moldovans staying over there. So basically, it's almost halved. So it would be quite difficult for them to send money back home, especially on both formal and informal ways. So that should have kind of an impact. And on outflows or inflows, I totally agree with Marina saying that, look, we don't have outflows because it's quite difficult, to close the factory and so on. But this is not the point. The point is another one, is that, Macedonia or Montenegro, all those guys, they are now going to European countries, to Poland, to Germany, and trying to convince the big automotives to move their facilities from Ukraine to their home countries. And unfortunately, now the NATO defense for Montenegro, Macedonia, for example, or like I would say, even saying Bosnia or saying Albania, which not a NATO member, but they have been closer to the NATO member, is kind of making a stronger argument for them to bring those facilities in the factories and so on. So do we have any opportunities here? Yes, maybe to attract some Ukrainian and Russian businesses. But the main point is like whenever we attract a Russian business, it's meaning that at some point we might be under sanction. So the amount of opportunities coming mostly from more attention from the European Union that might give us more grants to invest in public infrastructure. But I kind of really doubt that it's coming the opportunity in terms of factories or actual manufacturing. So once we get, the candidate membership or the candidate, status for the European Union, and maybe if this war finish in a good term for Ukrainians, then that will be an amazing opportunity for us. So I would say it's still early to talk about opportunities at the moment. Well, unless we talk about, something about market fragmentation. So now, there is SWIFT and there is Russian analog. So maybe Moldova can provide some opportunity by connecting to those two systems. But I don't think the banks will be happy to do that because they might be under sanction. Or on the other hand, maybe it's time to think more about the currency, the digital currency, the central bank digital currency, or even the same cryptocurrencies. So because there is this fragmentation between SWIFT and other analog Indian, Chinese, or Russian systems, maybe the central bank will push more for central bank digital currency, or more transactional going to be in cryptocurrencies. But the main issue is with the cross-border flows. So once we don't have yet, a proper network of exchanges where we can exchange, a digital yuan to digital, Indian rupee, for example. Maybe Moldova can provide some technological solution on this ground.
Thank you, Dumitru. That's interesting that you jumped into the opportunities so much, and I hope we'll have time to revert to that a bit later. But now I'd focus a bit more on the Moldovan banking sector, and since we know that the capital risk management and reporting requirements have been a certain challenge even before the pandemic and the war to the banking sector development and growth. Now the situation is becoming more complicated from that standpoint, with new requirements being appearing in the regulatory space. And of course, it's interesting to understand how prepared was the Moldovan banking sector for that, and how this situation would affect the operations in the Moldovan banking sector.
Sure, and it's a good question, and maybe some very important numbers that can reassure that the banking sector is very strong and has very good fundamentals to withstand the crisis and any development. Maybe let's start with the reserves. The reserves are strong, as Marina, you said. They will be even stronger with any support from IMF or EU directly or indirectly strengthening the reserves, and they are obviously, this is the reassuring factor to start with. The second one, we both said that the export to Russia and Ukraine was around 10 to 15%. So this is big amount, but this is not the largest amount. And if you look through our customer base in business customers, right? So that is basically reflected to the borrowers who have exposure to Russian and Ukrainian markets. They are not more than 15%. So that's also reassuring. The other thing which is very important, and we have said a few times, is the capital and liquidity buffers of the Moldovan banking sector. Even pre-crisis, the capitalization level of the banking sector was the strongest in the region, one of the strongest in the world. And the capital also, there is some technical term, but it mostly consists with the pure equity, which gives you even more assurance. If you think about the liquidity and liquidity buffers, numbers for comparison, you need about 120% of liquidity coverage ratio to function smoothly, and the banking sector had the liquidity coverage ratio 240% plus. So all these numbers are super strong. They are giving the confidence to be ready for any development. And this is why during the few days or few weeks when the crisis started, the banking sector has not changed or imposed any material restriction on any operation, and that is obviously very important during the crisis. If you start imposing restrictions, it will backfire. If you look in the future again, we firstly need to understand what is the balance and when the stabilization happens and what will be the real impact to the economy of the region and to the country's economy. But as we stand right now, the further positive factors are also there. I mean, we have very growing IT sector, so that can use the opportunities that are being created. The agro sector can benefit with the quite rapid increase in the prices of the commodities. So the scenario whereby the GDP growth or the GDP growth becomes around zero, a little bit less or a little bit more, and inflation is around 20%, is obviously not favorable scenario, but I would not overestimate its negative impact at all.
That's good to know. And as far as I remember, the ratio of non-performing loans in the total banking sector was quite low in Moldova, and you wouldn't expect that to evolve into a negative trend somehow.
Well, I think they can peak during this year or towards the end of the year, but I guess more important is the availability of the reserves and the availability of the capital to let this happen and wait until it returns to normal. But where we stand right now, they have not even started to materially increase.
Okay, thank you. And Dumitru, I think in one of our previous discussions you were slightly concerned about potential impact in terms of quality of the loan portfolio, but also the more expensive loans on the market. Could you elaborate a bit on that? How do you see it? And what's your feeling about the trends in the banking sector in Moldova?
I think the very good thing about our banking system is very solid. The capital ratios or liquidity ratio is quite high, so everything is good. But what about SME loans? So the SME loans, the NPL can just decrease or increase because they're exposed to Russia. So some of them, so it would be quite difficult at some point. So I think we have to be a little bit concerned of this.
Again, this exposure to Russia, and it is around 10 and 15%. So the business loans that are exposed more than 20% in their sales to Russia, in our case, is about 10-15%. And I want to, I mean, especially there is an agro season right now, and we do continue financing SMEs. And we are growing, if we compare it to the last year same season, we are growing there. Obviously there is an inflation which accounts for most of the growth. Nevertheless, we are growing. So I want to say, Dimitri, you are right on SME growth, but we still grow there. The real concern is the pricing, and pricing goes up. And the pricing goes up because the cost of funding also goes very rapidly up. But this is the effect of inflation and the reality that we need to live through.
Face.
Yes. So, sorry for jumping. I thought it is important. Yeah.
Thanks a lot. That's actually a very good point. And maybe actually we can connect Marina to this debate about the access to funding for SMEs. To which extent you think it might be worsening this year in the financial sector? And Dumitru as well, I'd like to hear your point of view on some discussions related to the potential limitations to crediting, which are currently discussed. So maybe we can also hear your views about this.
There were recent changes to legislation and for the banking sector and for non-bank accrediting organization. And the main changes were that these organizations now need to make checks on the ability of borrowers to return the money. And there are also some limits on the interest rate. But those limits are quite high. They are 50%, if I'm correct. But we don't know if inflation reaches 50% as well, then there's going to be a problem.
Okay, I see. Dimitru, do you hear us? No, he's not hearing us. Okay, then let's go to what was mentioned, the agricultural sector. And we have another potential crisis coming up, a local crisis. A drought, which is, I don't know, currently discussed. We'll see how it will evolve, but still. Do you think that this could bounce back on the financial sector, the situation in the agriculture? And actually, I'm asking both of you, both Georgi and Marina.
Well, if it will be serious, and nobody knows the reality, then if it will be serious, yes, then it will have potential negative impact on the quality of the book and the appetite of the banks to lend more. But so far, we expect it not to be that serious, and we continue again lending. Part of the increase of the loan book is again inflation, because these people, when they buy their pesticides, if that's the right word in English, they need to pay much more this year than they used to pay last year, and that's obviously increases their appetite and request to borrow, and we try to accommodate this to our SME customers. Again, the IT sector has the potential. IT sector is not borrowing much, but it can generate good deposits and can generate good payments, and that is also more or less related to SME sector's healthiness. So again, there are many things that we at this stage are not able to forecast, but we should not overestimate the effect of the negative effect, cannot be overestimated.
Fantastic. And I think Marina will second that.
Well, agriculture in Moldova has always been very risky business, even before the war, even when we had cheap fuel and cheap fertilizers. And as Georgi said, there's a problem now. The problem is it's not just fertilizers are expensive, they are not physically available because Russia stopped exporting fertilizers, and there is some production in European Union, but it has decreased because it's very intensive in natural gas, and the gas is very expensive. If farmers just skip fertilizers, this means that the crops will not it will not only reduce the quality and quantity of crops, but it will also reduce plants' resistance to drought. And every year you have something like a drought. Last year we had some frost in spring. The year before we had the drought. And in 2019 we had the floods. So every year something happens. And I am afraid that this is because of climate changes. So it's not going to go away. And for example, in 2020, when we had a severe drought, total agricultural output decreased by approximately 30% and had a negative contribution to the GDP of 3 percentage points. And since agricultural companies account for approximately 7% of the portfolio of loans in banks, that could have some impact on the quality of portfolio. But as Georgi already said, the current rate of NPLs isn't very large, and banks are more resilient now.
Okay, thank you.
And we don't have that kind of severe drought yet.
Let's hope.
Let's hope that we will not.
Yeah, well, fingers crossed. But
Yeah.
As Marina said, each year we have something, and hopefully this year it will not happen. And but yet, if we are having these climate changes, which are imposing a new view on how to work in agriculture, then do you think we might expect some behavioral changes among our agricultural producers that would lead for more intense usage of insurance instruments as one of the ways of fighting with these natural effects, disaster as well?
Indeed, I think yes. In 2021, a new law on subsidizing of insurance premiums for agricultural activities was adopted and implemented. And the first numbers from 2021 shows us increase of gross written premiums in the agricultural sector of 400%. Okay, from the relative standpoint, it's a quite big increase. From the point of view of absolute numbers, this market is estimating at around 60 million lei currently. But we see even currently more insurance companies are interested in developing these products, and the feedback is that indeed farmers are looking at it, and we hope that within a couple of years, several years, more farmers will buy this service, especially in the current context when the government subsidizes around 70% of the price of an insurance policy. So it's quite, I would say, quite cheap for them, for the farmers to acquire this service.
Thank you, Adrian. And speaking of behavioral changes, Marina, would you see that this crisis is somehow imposing, have you observed any obvious behavioral changes in the population related to the savings and to how to spend the money, also connected to the remittances, not from the inflow standpoint, but rather what would they do with the remittances if they receive them? Also from the previous experience, from previous crises, how did it evolve?
Yes, we do see some changes in the behavior. For instance, if we look at individuals' deposits in Moldovan lei in banks. So we see that as of the end of February, their stock has decreased by around 3%. So what did people do with the cash? Maybe they put in their foreign exchange accounts, but they didn't, because the foreign exchange deposits didn't increase much. They stayed roughly the same, which means that there is a big preference for cash now. So people just took their money, maybe exchanged it in foreign exchange. That would be around $45 million, this 3% decrease, and put the money in the piggy bank at home. And if we look closer at the time and sight deposits, we see that the decrease in time deposits was less significant, which means that incentives still matter, because when people have larger interest on their deposit, so they are less keen on withdrawing their money, so they keep it there. And in terms of remittances, it's highly unlikely that people will try to make investments with their money now, because there is a lot of uncertainty. Even during peaceful time, they didn't invest much. Largest part of remittances went to current consumption. But now especially, the remittances will not end up building investment here. It will go to piggy bank again.
Yeah, got it. Thanks a lot. And since we have again Dumitru with us, I would like to go to him and to dive a bit deeper in what he was mentioning as opportunities coming out of the crisis. Dumitru, can you confirm that you hear us?
Yeah, I can.
Yeah. So, well, you initiated a discussion about the CBDCs, the crypto, and I'm cryptocurrencies, and I'm curious to which extent we can expand this discussion on CBDCs as well. Would you see a higher interest in central banks in developing those instruments, and how would you overall see the potential of the cryptocurrencies to be a tool which might be more intensely used given the current situation we're having?
Yeah, I think what has happened with the central bank FX reserve kind of fueled the skepticism of the solid fundamentals of the current dollar-centric payment system. So I think, the other countries that has, more like geopolitical clashes with the US, like China, Brazil, India, which I think is quite important, like China, India, definitely India is one of the next rising stars that is coming in. So if those two countries they want to decrease their reliability on the dollar or the euro, it means they're going to push for their transactions to be more denominated in other countries and in other currencies. So it would be the Indian rupees, yuan, and so on. So by saying that, it's meaning that, we are moving into a world like a Cold War in terms of the transactions, where we're going to have block currencies, where, the US, the West, we're going to trade dollar and euros, while the rest of the world maybe was going to trade in something other currencies. So I don't think the dollar is the one that, there is nothing that can replace dollar at the moment, but I think there will be a lot of effort in order to replace the transactions in dollars and euros. And if it is the case, then a lot of central banks maybe going to push more for their central bank digital currencies. But the issue with the central bank digital currency is, it's still a currency controlled by the central bank. So you still will not want to do the transaction with dollar and euro, a digital dollar or euro, because at some point the ECB or Fed can freeze your FX reserve. So this is meaning you want to develop a currency that cannot be controlled by so many countries or by a specific central bank, or at least to make the transaction that particular currency that is very easy and fast and cheap. So why we are transacting the dollar and SWIFT is because it's fast and cheap. Once we got the CBDC cheap and fast, let's say digital yuan, then probably we'll have more transaction to that. The main issue here is like, how do we convert digital yuan to digital dollar, or digital rupee, or digital Russian ruble, for example? And this is the main issue. So the technological solution or the exchange where we can convert them, that is something that, you know, a country like that have a huge IT potential like Moldova can offer a solution. So imagine having Moldova like as a digital currency exchange. That would be kind of amazing to do the connection between the West and East. Of course, we have to be careful not to circumvent any sanctions, not allowing people, any banks or oligarchs to circumvent sanctions. But at least, the conversion between digital dollars and digital yuan is something that probably, or digital euros and digital yuan, probably something that Moldova or the other countries they can offer. That will be something that we want to look into that. The other thing is like, doing this arbitrage between those payment systems, because we still have the SWIFT, that is mostly for the West, but we're going to have like 3 or 4 more other analogs payment system that countries like India or China and Russia, maybe Brazil as well, they're going to push for it. And the country that will succeed to make the connection between those payment system, I think they can make a good amount of money by being this intermediary between payment systems. So the way it would work, like you receive the euros or dollars from SWIFT in Moldova, or like in any other country that is happy to do that. I'm pretty sure that Serbia will do it, for example. And then you convert into yuan or Russian rubles, and you send it via their analogs to China and Russia. But for this, we need a very solid swap line between the central bank of that country or the central bank of the other countries in order to get the liquidity of the yuan, rupees, and so on. So I think this is something that is debatable. We have to think about, but I kind of relatively hawkish on the dollar-centric financial system, and I think more kind of countries or central bank will be more careful about their investment in dollars and euros.
Thank you, Dumitru. And actually, Georgi, how do you feel about what Dumitru was saying as a potential perspective of becoming this, using this opportunity and becoming this hub, if you wish? To which extent the banks, and Dumitru has carefully mentioned about the banks needing to accept that, to be part of it, also from the standpoint of not being perceived as circumventing sanctions and so on. How do you feel about this? To which extent do you think that's feasible from the very practical point of view?
Well, I think the digital currencies, especially if we think about the digital currencies of the Western banks and Western central banks, they do represent certain opportunities, and they need to be discussed better, including in the West, and they may represent some opportunities in the future for Moldova as well. The overall digital currencies, cryptocurrencies, there is a quite slim line between what you can do and what you absolutely must not do, especially during this quite uncertain situation. So in the short term, I perceive it to be quite difficult, but in the long term, we should see what we can do. I think one thing needs to be highlighted, that we are part of the international payments or settlements systems, and any sanction that is imposed internationally in the US or in Eurozone, we need to very accurately implement here. Because this is the part of our obligation towards these systems, despite the fact what our local regulatory environment tells us. That's why we are extremely careful with any transfer, any transaction, or any initiative to ensure that we've done it very accurately, and we are doing it. Quite accurately as well.
Absolutely, I'm getting that. But picking up from this point, and you mentioned local regulatory environment, but also some other requests coming from your wider participation in the sector, in the region. Do you feel that there is a certain increase in the pressure of the procedures you need to go through? I mean, everything related to client acceptance, everything related to onboarding, and so on and so forth. More careful risk management procedures which would be imposed out of this situation from the local standpoint, which is pretty much clear. We know how the framework is evolving, but also from the wider perspective.
Well, I think the fact that people are now in the sanction list that had not been before, or the banks are in the sanction list, obviously means that we need to look to each transaction and ensure that this transaction is not somehow these banks, for example, are not involved in this transaction, in any chain of the transfer. So that means to apply additional procedures, that means to apply additional checks and so on. And this is the reality. It's not that someone now came up with additional procedures for us, but again, the reality is that because of the sanctions, we need to take extra measures. But again, I would not overestimate this effect either, because there are, if Moldovan businesses still partner with some businesses in, let's say, Russia, there are banks in Russia that are not that are not sanctioned, and these businesses can do settlements through these banks. And in the last months, we even opened one more correspondent account in such bank. It is Raiffeisen Moscow, just to ensure that in this case we don't act as an obstacle for our businesses to continue partnership.
Okay. And what about cyber risks?
This is very big and good question. Cyber risk, even before this crisis, was very important, or at most important for us, and it continues being so. We didn't see very increased cyber risk related activities in February and March. We saw some 20-25% increase of suspicious activities, but we cannot exclude that in the future it will become even more, and we are prepared there as well. We have all necessary equipments and policies and procedures to ensure that we are isolated and we can switch off any channel in any country or any location when we see the suspected activities. But cyber risk, yes, the risk becomes even more important during this period.
Okay, I will not ask you about the whole sector because you are speaking as a spokesperson of the bank you're representing, of course, but I'm curious about the non-banking financial sector from this standpoint, from the level of resilience to those risks, including on the cyber standpoint. Adrian, to which extent you feel the cyber risks being understood and properly treated by the entities which are in the field, in your regulatory field?
Okay, and in case of non-bank financial institutions, which means insurance companies and non-bank credit organizations and even smaller one, loan and savings associations, this risk is not so present because it's usually more local software. There is no such a big level of interconnectivity as there is in the banking sector with other banks and software system. So basically speaking, the risk is quite small in this sector.
Okay, thank you. Also on the IT side, if we look at the presence of the Russia-produced IT solutions for the financial sector. And not only for the financial sector, if we look at the accounting, we can say that we are pretty much using, I don't know how many percent, but very close to 100, one solution which is coming from Russia. Do you see any specific risks associated with that somehow? And of course, in the banking sector is important because I assume that there are also solutions which are used by banks in their IT infrastructure, which are coming from Russia. I'm not speaking necessarily about the core banking systems, but anyways, there might be solutions of this kind. How do you feel about that?
Yes, this is a very good question. So the critical systems we have, we don't have from Russia, and we are seeing this type of trend that many IT companies, or at least the ones that we are working, they are leaving Russia and they are establishing their offices internationally, starting from Dubai and ending with Netherlands. And when these companies exit completely Russia and take on the rights, because they still represent Western companies, right? They used to represent through Russia, and then they are going now to represent from somewhere else, then we can relaunch these discussions. And we are seeing in the real life that these companies are leaving Russia and establishing themselves in other jurisdictions.
But I think we might also expand this not only to Russia, but also to Belarus and Ukraine, of course, because even though Ukraine is not necessarily affected by this exodus because of their willingness to leave, still the companies are not necessarily functional. Right?
No, actually you would be surprised, but we do work with Ukrainian companies on specifically on very important IT component in our bank, and they provide, they continue providing the solutions. Obviously they were very agile to reset themselves in the new reality and work on distance and take the company's essential parts outside of Ukraine, but they were very quick, and then we continue working with them. This is the software called Creatio, which is an important part of our customer relationship model, and they've done a very good job.
Fantastic.
Alex,
that's actually very good to hear. Yes, I was going to ask you, but jump in.
No, but just one additional thing to what Georgi was saying. You will be surprised how Ukrainian they continue working as business as usual, because like the Ministry of Finance, for example, is doing the business as usual. They're issuing the bonds internally. They have calls with investors. They are publishing the data, not the data. You know, the statistical office and so on, but they're publishing their monthly bulletins and so on. So actually, the Ukraine, despite the fact that like they're in a war, they're pretty much doing their business. They're business as usual. So kind of it's surprisingly that they are doing that. So I wouldn't be that well on the Ukrainian software, to be honest, at the moment, because they're quite the professionalism that we can see in Ukraine. It's amazing at the moment.
That's great.
Yeah, so they are doing an amazing job.
Absolutely. And Dmitry, since you jumped in on this topic, maybe you could also comment a bit on the cyber side of the discussion in terms of the risks, but slightly more from the regional standpoint. How do you assess that? How do you feel that in your current position?
I'm definitely not a security expert, but from what I'm trying to say is, you know, the fragmentation that we see in the payment system is the same fragmentation we're seeing in all those other things. So we're kind of moving into the Cold War, where like the countries that is with the West, they will have to use their own system. You know, the West approves the system. While the rest of the world, which is, you know, China, India, Brazil, Russia, they're using something else. So at some point, every single country in the world, they have to decide on which part of the Cold War they are. I think Moldova has already chosen. their side. But once we have this split, an official split, an official declaration of war on all the fronts, it actually, this is where you can see even more cybersecurity attacks, more spies, more espionage and things like that. So what we have read in the books about the Cold War, I think we're moving to that direction and making the world a little bit more dangerous because you cannot control each other. And this is giving it more opportunity for the other countries that have been kind of not dominated, but kept under their potential by the West, making them to express their willingness. For example, Iran now is not that much dependent on the US about the nuclear deal because everyone needs oil and there is no one that can replace Russian oil. So all those kind of the small places in the world where the West was trying to control. Now everyone will say, well, this is an official Cold War, so we don't need maybe to follow the West orders anyway. So we're gonna, team up with India, China, and Russia, and we'll do, being the other side. So yeah, I think we are moving into a world which is a little bit more dangerous. But I'm not a security expert to express you what's happening exactly.
Of course.
But we can see that. We can see these clashes, as official clashes. No more diplomacy is working. It's more about, having a side on the West or the rest of the West.
Well, I think we can then discuss it a bit in more details during the second edition of Digital Transformation and Financial Inclusion Conference in May, and the details will be coming soon on how that will happen and what exactly that will contain as agenda. But before, there are still a few, I think one question coming from the audience, which I'd like to address to Adrian, and maybe if you'd like also to comment on this. So it was mentioned that 60% of the Moldovan insurance risk is reinsured in Russia. And considering that debtors are obliged to insure pledged assets, how does the fact impact the credit risk for banks?
So I think maybe it was a problem with translation. So it was 60% of the total reinsured premiums are insured in companies registered in Russia. As I said, currently there are no risks that we can track that it may produce a negative impact on the local insurance sector. Nevertheless, as a regulator, we supervise the quality, the formation of technical reserves, of capital adequacy. So in these terms, I mean, the sector is quite stable, and obviously it shouldn't produce any risks on the crediting, on the credit side, as it was mentioned.
Thank you, Adrian.
Yeah, we don't, at this stage, we don't see any material change in the risks related from this factor. Well, this discussion overall is, I must be honest with you, is slightly more optimistic than I was expecting, and that's very encouraging, and that's making us hopeful that we will see a positive evolution. To the extent it can be positive under the current circumstances. And I would like to thank you a lot for being part of this discussion, and to say that we will have these topics and other topics discussed in more details during the, again, digital transformation of the financial sector and financial inclusion conference in May, organized by the executive team of AmCham, but with support, of course, with the partners. And I will not be pointing fingers right now, but I'd say that some of the partners are also present here, and hence I will have the pleasure of addressing one last question to you, Georgi.
does it mean that the positive tone of this discussion we had today haven't changed at all your plans on the IPO, or even more accelerated them?
This is a difficult question. The target has not changed. The timing will depend on the eventual understanding when the conflict is nearing the end. But I think this conflict also creates additional opportunities for Moldova's acceleration of Moldova's path towards the European Union. And if that happens, that will accelerate our well. So because that is the momentum that investors also will be looking very positively. So I guess it's a premature discussion, but target has not changed. The timing we will see when we will be nearing the end of this conflict.
I like your cautiously optimistic answer to this, and I propose that we close by this answer. And thanks a lot again for your presence here in the studio. And Dumitru, thanks a lot for being with us. We do hope that in May you'll be able to join us physically, and by this we will avoid any technical issues which might arise.
But by the way, on Georgi's comment, I mean, financial market is not.
I knew you would comment on that.
They're gonna buy now. Even the Ukrainian bond can be bought, right? So the way, if the price is good, I mean, people will buy it like crazy. So I think the optimism of Georgi is something that has to be all around. So the market is not looking into risk like that. So as long as the price is good enough for the risk, they're gonna buy.
Yes.
Okay, we have a consensus here. Thanks a lot.
Thank you.
Have a good day, and see you soon. Bye-bye.